Few moments in history reshape markets the way artificial intelligence is reshaping them now. But every boom has a shadow. And the question no one dares to answer softly is, are we witnessing innovation, or the largest market illusion of our generation? By 2025, AI is no longer a futuristic concept. It's a trillion-dollar market narrative powered by the world's biggest companies. And investors, analysts, and governments are all placing their bets on one assumption: that this time, growth can only accelerate. Yet the numbers tell a more unsettling story. In the year 2000, the world watched the dot-com bubble burst. Companies without profit, inflated promises, and unstoppable capital flows created a mania so convincing that even professionals believed fundamentals no longer mattered. Today, the same echoes are growing inside AI. To understand this bubble, if it is one, you must first understand its heart. The AI race is not led by software, but by silicon. One company, more than any other, enables the entire infrastructure: NVIDIA. From data centers to AI training clusters, its chips have become the standard currency of machine intelligence. The market crowned it the uncontested backbone of AI. And the stock momentum helped drive major indices like the S&P 500 to record valuations. But here's the first sign few expected. NVIDIA does not control demand. It only supplies a race fueled by others, especially the giants renting this infrastructure at scale. The largest spender on AI deployment today is the cloud empire of Microsoft, which integrates AI into corporate ecosystems, consumer products, and cloud computing dominance. And Microsoft is not alone. The data and search engine narratives of Google are equally intertwined, injecting AI into advertising, user behavior models, and computational expansion. And in the middle of all this, the symbol of market excitement itself. The tech index known as the Nasdaq keeps climbing, powered by companies whose valuations grow faster than their revenue ever did. Not because AI is proven, but because AI is believed. So where exactly is the bubble? It lies in three fragile assumptions. First, that computational demand will expand forever without cost pressure. The idea that AI spending can rise infinitely ignores the economic reality that capital always tightens. Historically, interest rates and liquidity cycles end every frenzy. A pattern known in macroeconomics as the when money becomes expensive, illusions become exposed. Second, that AI companies are meaningfully monetizing the boom. The most influential AI model provider driving market imagination is not a public equity giant, but a private innovation lab, OpenAI. OpenAI doesn't trade on the stock market, but the companies commercializing the AI dream do. And many are priced as if they already dominate future profit streams they have not yet generated. Which leads to the third assumption, that adoption equals financial success. It does not. Viral usage creates hype, not necessarily profit. The public remembers narratives, not balance sheets. And the best evidence of a bubble forming is not optimism, it's uniformity. When everyone sounds certain, the risk hides in plain sight. Look at market psychology today. Forums, headlines, earnings calls, investor meetings, all repeating the same story. A narrative loop so strong that investors stopped asking the old market question, where is the real cash coming from? Exactly like 2000. But here's the twist that makes this moment even larger. The AI bubble is not only a tech bubble, It is a macroeconomic convergence between capital, geopolitics, and infrastructure concentration in the United States. It influences pension funds, hedge funds, sovereign strategies, and even GDP forecasts. A phenomenon bigger than company fundamentals, bigger than stock price alone. It is an entire economic epoch being priced into belief. If this belief proves true, AI changes civilization. But if it proves premature, the crash won't look like a correction. It will look like 2000 on global leverage with 2025 speed. And markets move fast, but downturns move faster. So will it burst? This channel doesn't deal in predictions, but in patterns. And the pattern is clear. Unprecedented capital concentration. Infrastructure monopolized by a single chip supplier. Adoption raising hope faster than revenue raises certainty. And a global audience convinced that this cycle defies history. That is not just growth. That is the anatomy of a bubble. The real question is not if it bursts, but when the world realizes it was bigger than they thought. And if you enjoyed connecting the dots between markets, technology, and global economics, then the next story is one you'll want to see. Because every financial story has layers we don't see at first glance. And the next one might change the way you look at the market entirely.